everyone, this is Rob Roy of Elliott Wave Options, and welcome to this edition of TradeFinder, our free educational publication where we take you a bit deeper into the technical analysis system utilized to identify trading opportunities and then to qualify them to send out to our subscribers as alerts. So with that said, let's take a look at some charts. But the first one I'd like to share with you in this recording is our trade ID number 147. It's on the NASDAQ, symbol NDAQ. It's in our volatility strategy, so it's a long strangle. So you can see we returned just under 25% in 72 days, which sounds like a bit of time for 25%. But let's take a look at the particulars because there's some interesting things to think about when it comes to this alert. So our entry was on November 6th. And clicking down here, the fascinating thing here was kind of like a double symmetrical triangle. We had done this as an alert before. You can see the first triangle, and it broke out immediately. So not only did we have a really nice symmetrical triangle, we got a bit of a vertical breakout, and then it came back and retraced the breakout. That happens the majority of the time. Once a triangle breaks out, it will retrace it. Now, it doesn't always do it this fast, but usually the entire breakout will at some point in time get retraced back to the breakout point. This one just happened to do it immediately. So we had closed the position out on the initial breakout, had a nice profit, and then kept an eye on this one. It seems that certain stocks tend to just break out and consolidate and break out and consolidate. This was the first alert that we had done on NDAQ, but it worked well. So obviously when you have success, you keep those in mind. And look what happened. It immediately reformed right into another symmetrical triangle, just back to back. So boom, big quick breakout, and then reformed. And the ADX had gone even lower than it was before. And the ADX is one of the symbols we look at to help identify triangle patterns, because a very low ADX means that you have a trendless stock and triangles are non-trending patterns. So it made sense. So we're set up here, we're ready to go, and then it took a bit of time, unlike the original one, the first one. So this one we closed out on January 17th, and so if we take a look at this, you can see that this one broke out, then it went sideways, broke out again, and then moved up to the target point to where we close the position out. So you can see the reasoning behind why we didn't make but 25% on this breakout is it took a lot of time. The one enemy that we have in this strategy, it's set up to where we can make money as mathematically fast as possible, but the one caveat is since we're buying a call and buying a put, time decay. That's the one enemy. So the sooner it breaks out, the better. We still made a nice gain, still made 25%, but it took longer, and so therefore the profit wasn't as high as it would have been on the breakout. So that the lesson there is that time matters. I'm going to show you something as far as how we knew where to take this one off. But before we do, there's one other that I would like to share with you, which is a trade ID number 163 on Visa, just symbol V. That's in our impulse strategy, and you can see this one was a call vertical debit spread where we turned 43% in 5 days. So quite a different scenario there as far as a much bigger return in a much shorter period of time. Let's take a look at the particulars here. The entry was on January 9th. And so we can see that the chart set up here was a wave 3, so a good impulse. A lot of people in the world of Elliott Wave say stay away from the wave 3. I say why? It's the strongest wave. Why do we want to stay away from that? When we have an opportunity, let's take advantage of it. So we've got a good impulse. The beginning of the wave 3 just kind of started ho-hum, a little bit of a drift up, and then the impulse kicked in. And looking at the DMI, one of our favorite confirming indicators, it was showing great separation between the two directional indicators, and the ADX is curling up. And so in this case, the ADX is telling you that we have a trend forming, and it's a strong trend. So where we use the ADX for finding non-trending, we also use the ADX to help us confirm when something is trending, because it's a good versatile indicator. So there was our target right there. You can see the wave 5 target there right around 200, which that's going to be interesting in a minute as well. So we closed this out on January 15th, again, just 5 trading days later, because as you'll see from this chart, it reached our target point. It reached right to that 200 level. Now notice what happened. The wave 5 target moved because this got here, it hit its target, and it got there so fast, it's still in the wave 3. So that caused Elliott wave to reset, which is one of the things that I like most about Elliott wave is it's dynamic. It moves with the market and it adjusts with the market. It's not just static to where if things change, it doesn't change and evolve with it. It, as I said, dynamic and changes with the market. Just fascinating. So here we were a bit overbought short term. We had hit our original target. That was the trading plan. So we closed the position out. And again, you can't be upset with 43% in 5 days. So what I like to do is take a look at where things are from the time that we close them. And as I mentioned to you, there was something interesting about the NASDAQ position. And that's what I wanted to show you was how we come up with where the targets are. So you look at, here's the high, and here was the low somewhere in here. So just call it roughly 105 and 95. So we have a 10-point mouth of the triangle or mouth of the wedge, whichever you prefer. And so going from the point of the breakout, you can look at that at 100. We take 80% of that. Now, the likelihood is that on the breakout, it'll move the same amount as the width of the triangle, the width of the wedge. But normally, the most volatile move of it is the first 80% of that. In other words, that's where the thrust, where the volatility is, and then things tend to settle down and maybe it drifts that last 20%, and then you lose the implied volatility pop. Well, in this case, the entire move was slow, as we've indicated already, but we got to our target price. We broke above that 108 level, so it was time to take the gain and go. It just didn't have that thrust far enough. It got close. You can see we got up to 106, and then it went sideways. Usually it would have gone to 108 and then done the sideways move. So a little more time involved, but still a very nice gain. So that's what I wanted to share with you there, was the way in which we determine when to take the position off on these triangles. The other thing that I wanted to share with you was on the Visa, here was our exit. Now notice what had happened. We saw in the other chart where we had this separation between where the stock was trading and the 10-day moving average, and you know my rule, no security in any time frame gets very far away from its 10-day moving average. So when we see overbought, again, we've got the implied volatility pop. So we want to take advantage of that when we can, and normally this is going to settle down a bit, either go sideways or possibly even correct a little bit to close in that gap between where the stock is and the 10-day moving average. But in addition to that, we have a doji here. So we're overbought, we've got a doji, and the thinking is, oh yeah, we're likely to see this come back down. Plus, we've hit our target. Remember that original wave 5 target was right there around 200. But the target moved up as the stock moved up. We went ahead and closed the position out. I still think it was a great exit. In this case, however, we did continue to move a little bit higher. And you can say, gee, you should have stayed a couple more days. Well, you can money quarterback all you want, but in the end, 43% in 5 days is a very nice return. That's what I wanted to share with you. I hope you found that informative. Look forward to talking to you again next time. Take care, everybody.